Sure. So good afternoon, everyone. My name is Mudassar Iqbal. I am CFO of the company. Along with me, Mr. Umar Kadri, he is the Director Marketing and Commercial. Mr. Hassan Kazmi, Director Manufacturing and Sustainability. Mr. Agha Waliullah is our Director Corporate and Legal, and our members of the finance team welcomes you to the annual corporate briefing session for the financial year 2025. So we appreciate your time and interest in the business and operations of the company, and we will take you through to the session today. So we will begin with the company profile, followed by the financial highlights, and of course, we will be covering strategic and operational developments, health, safety, and environment. Then in the end, we will open the floor for the questions and answers. So we start with the company profile. Of course, we all know it's Colgate Palmolive Pakistan Limited. It's a joint venture between the Laxon Group and Colgate Palmolive Company USA. And we operate in two major categories, which is home care and personal care. We manufacture, market, and distribute all those products in the entire of Pakistan. And we have three manufacturing facilities, two in Kotri and one in Sundar Industrial Estate, Lahore. So these are some key milestones and achievements. Of course, the company incorporated in 1977, started production in 1981. We got listed in 1984, and of course, we got the license to manufacture Colgate Palmolive Company products in 1985. In 1996, we crossed 1 billion rupee sales landmark. Then, of course, in 2010, we crossed 1 billion rupee profit. The steady achievement of the company throughout. Our Sundar plant came into the operational mode in 2011. Then, of course, local productions of shampoos and toothbrushes started in later years. In 2020, very, very significant year in terms of numbers, we achieved 50 billion sales annually. And the next year, we touched the 55 billion profit mark. Then, of course, in 2023, just after 2 years, we crossed 100 billion sales and 10 billion profits. In 2024, we were the company which exceeds market cap of $1 billion. And in 2025, now we have crossed 150 billion rupees in terms of gross revenue. So we have also won the Corporate Excellence Award from the Management Association of Pakistan in Food and Consumer Sector segment this year as well, and it is 13th consecutive award for the company. So there are some key financial highlights which we will be covering. Of course, it's the annual turnover for the year. Then the gross profit margin, which is of course improved this year, and operating profit margin as well. Earnings per share were ₹75.78 per share, and return on capital employed 78%. Here is a graph which shows the progression and the growth of gross sales and gross profit margin percentage. The company has been able to improve and expanded our gross margins despite very tough, challenging situations. But luckily, we had a good financial year in terms of FX rates. So this is the profit after tax and dividend payouts. Dividend payouts have been exceeding around 80%, 81% in the last 2 years. And profit after tax have also shown growth this year as well. So this is the table which shows the profit reinvestment and dividend payouts, as the numbers are evident. 81% is the payout. So of course, we are keeping very limited cash for our business as capital expenditure need only. So I request Mr. Umar Kadri to take you through on these strategic and operation developments part.
Thank you, Mudassar, and good afternoon, everyone. So as you know, under the two broad categories, home care, we have fabric and surface, and personal care product, we have the oral care range and our personal care products. In fabric, as you can see, we compete in all price segments. So in premium segment, we have our flagship brand, which is Bright Maximum Power, which competes with the likes of Surf Excel and Ariel in the market. Then we have Express Power, which is in the mid-tier price segment and is positioned as, everyday low price kind of proposition, and why pay more kind of positioning versus premium detergents. Then we have Bonus TriStar, which is our brand, which has a role of getting non-users and the unbranded or local players users to a good quality branded detergent in the market. In surface care, we have Lemon Max Bar, which has 4 different formats. So we are present in the bar format, then liquid, scurrying powder, and paste. We also recently entered into cleaning supplies like Max Scrub, which is a scrubbing pad and sponge. And then we have all-purpose cleaner under Max brand as well. Moving on to oral care, as you see, there are different toothpaste under Colgate brand. And we have mouthwash plus toothbrushes as well. Personal care, our main flagship brand is Palmolive bar soap. We are growing in this business every year. And for the past 4 to 5 years, we have been actively marketing our shampoo brand under Palmolive branding. Then we have our liquid hand soap range as well, which is driving the premiumization and the growing trend of using liquid hand soap in the country. Then the antibacterial range, which is Protex, is also part of our personal care portfolio. This is a look on what we have done in 2024-25 in terms of innovations. So when it comes to supporting our brand on media and on ground, there are IMCs, 3 IMCs last year, which are integrated marketing campaigns on our flagship brand, Bright. Then we also supported our Bonus TriStar. And then new communications campaign on Express Power as well. When it comes to new products, Tufan is one brand that we have recently test marketed, and it is against the growing regional brands in areas of Punjab plus KPK. So this brand is being test marketed with the kind of formulations that are working in those areas. So this is a new rollout for us. Then we have a relaunch of Softland, which is a fabric conditioner in fabric care, and the introduction of a new variant of lavender that happened for this brand. Oral care, we have a new IMC on focusing on nighttime brushing campaign. So in Pakistan, our per capita consumption of toothpaste is quite low. It is only 85 grams per person per annum. So this campaign is actually targeted to increase the consumption. And we as a nation are, quite fond of having sweets at night. And quite a few of us, go to bed without brushing. So this is one effort to increase the awareness of how important it is to brush before you go to bed to maintain your oral hygiene. So this campaign targeted towards improving or increasing the consumption of the category. Then we introduced sustainable packaging, and all our tubes right now we'll discuss more in detail in the later slides, but all our tubes that right now are 100% recyclable. Then we introduced new packaging on our herbal brand and our flagship Colgate Maximum Cavity Protection brand. So these two have recently gone a packaging revamp in the market, and those new packaging you can see on shelves as we speak. Then Max Fresh, which is one of our leading brands in the category. It is in the freshness segment. It was introduced with new formulation, which has new improved flavor and longer lasting freshness with this new bundle that we have rolled out. There is another new launch that happened in the category. We introduced kids toothpaste in the market, and this is particularly suitable for children from age 2 to 6 years. So this is a gap which exists in our portfolio that we covered through this new launch of kids toothpaste. It is in two variants. So there is a Barbie variant and there is a Batman variant. Both have different flavors to appeal to different likings of the children. So this is a first in the Pakistani market where there is a brand which is not just talking about the sustainability, but it is as its objective. It actually executing it as well, and it has extended that sustainability objective or agenda to its packaging with this rollout of the recyclable tubes in all our toothpaste brands, which obviously has helped us to improve the carbon footprint, and it reduces it by 26% per tube with this initiative of recyclable tubes. Yeah, so here is just a impact of what this initiative has on the environment, where we have been able to reduce the carbon emission per tube by 26%. And if you further dissect it, so it is equivalent to removing the need for thousands of car trips, saving enough energy to power entire neighborhoods, and preventing tons of waste from reaching landfills. When it comes to our home care, which is surface cleaning, then we have recently launched Max Scrub Steel Spiral. It is a new product that is introduced in our cleaning supplies. And after a success of the Max Scrub pad and sponge, we are very hopeful that Steel Spiral is also going to be a significant player in the market in cleaning supplies. Followed by the launch of Max APC refill pouches. So we introduced Max APC refill pouches at rupees 750. This obviously is going to make all-purpose cleaner more affordable for the consumers, and it is now available across the retail channels that exist in our retail market. In terms of personal care initiatives, you can see there are a couple of new initiatives. There is a bundle pack that we introduced with a saving of rupee 20, and then there is a SKU launch of 165 gram in our orange variant. So we have around four cornerstones to our growth strategy. Number one is consistent media presence that we are going to discuss in detail. Then category growth initiatives. So consumption building is a key area where we focus on. Then consumer engagement. So how we brought our campaigns to life on ground, and when it comes to directly connecting with the consumers. And then winning in key retail environments, how our brands are better visible on the shelf, and they are, better visible versus competition. So when it comes to consistent media presence, it's a very comparatively fought market where this detergent industry, and we support all our three brands with breakthrough advertising, with impactful communications, and there is this glimpse of our campaigns that are right now live on television and digital mediums. Then there is oral care, where, as I spoke earlier, we are currently focusing on improving the consumption of the category, and the messaging right now is that if you brush tonight, you will sleep with 50% less cavities chances. So this is how we are trying to inculcate a habit of brushing before bedtime. And then there are some execution of this campaign in outdoor as well and across different touch points. Similarly, we are very active on the two formats which are growing, and the most important ones in the dishwash category, the bar segment and the liquid segment. So both these brands are supported by heavy advertising both on television and digital mediums. Then there are new campaigns this year that we rolled out on Palmolive soap and Palmolive shampoo. So across all the touch points, these campaigns were brought to life to create an impactful rollout for these campaigns. Then the category growth initiative, My Bright Smile Global Art Contest plus the school program. These two initiatives are there for since 1996, and they have been growing every year. So far, the Bright Smiles, Bright Future School program has reached 17.5 million children in Pakistan since its inception. And in parallel, we also run Padho and Badho scholarship drive to strengthen brand equity. So these two programs are, not just inculcating the good oral hygiene practices, but also giving our children an opportunity to display or manifest or share their talent of creativity. Then there is category growth initiative, the conversion activities which are active on the detergents plus our liquid brand, dishwash liquid brand, and bonus as well, where we are trying to convert the regional players, the users of regional plan and the non-users to bonus TriStar. Again, some examples where consumer engagements are happening in store. So we have trained brand ambassadors which are deployed on modern retail environment, and where they engage with the consumers and they pitch them our brands and detail them about why our brands are better than the competition offerings. Again, in oral care, there have been consumer engagements which are different from other categories. So not just pitching to the consumers about brands and why they are better than consumers. We also take on board professionals, which are professional dentists who carry out the dental checkups in these retail environments, and they inform those shoppers about their oral hygiene and about their oral health, and recommend the products which are most suitable to improve or maintain their oral health. Similarly, Max Liquid has also in-store activities and direct-to-consumer activities at Mohalla and Mohalla level and apartment levels. So we are not just keeping our engagement restricted to retail environments, but we are also reaching out to the consumers in their neighborhoods. Consumer and trade engagement continues with Max Liquid activities of informing the shoppers how the B2 brands or the counterfeit brands are impacting the quality of the products that they are buying. So there is a campaign that we have on-ground campaign that we have run with Max Liquid, where this awareness is created that you should buy the original product and not go for the counterfeit product, because it is not a quality product that they are buying, and it may harm because you are using it for your dishwashing and all. So in long run, it may be harmful for the consumers. Now, similar examples of Palmolive shampoo and some of our other formats like liquid hand wash and Palmolive soap, where we have invested in terms of creating the kind of image we want for the brands in store, and then connecting directly to the consumers, giving them the brand message, plus detailing about how this brand can bring delight to their lives. Now, coming to our fourth cornerstone of growth strategy, which is winning in key retail environments. In general trade, you can see there are some examples how our brands are displayed and how is the overall display is executed in the general trade, and the irresistibility of the display is something which is very important in a cluttered general trade retail environment. So day in and day out, we are focused in terms of creating this impactful presence of our brands in the general trade. And here is an example or a glimpse of all our categories, how they are maintaining the visibility in modern retail. There is this challenge that almost all the FMCGs, in the organized sector are facing, which is the counterfeit products or Me Too products, and our teams, which are on ground, they work throughout the year for preventing significant quantities of counterfeits from reaching consumers. So, every month there is something happening on this front, and we are taking them very seriously, and there have always been actions where we try to confiscate the machines, the packaging, even the finished products which these counterfeiters are making. So this is all from my side. I'll hand it over to our Director of Manufacturing, Mr. Hassan Kazmi.
Thank you, Umar, and good afternoon to all the audience.
And as one of the growth pillars, along with other operational activities, we have environment, health, and safety as a critical point in our operations. And we have been, striving hard to keep the operations responsible by, focusing on reducing the waste. And for that, we have strategies in place where we are aiming to go for a zero waste. Along with that, vision in line with our operations, we have already achieved reduction of substantial plastic quantities, like 630,000 kilograms of plastic has been reduced from our packaging. As Umar has already spoken about the introduction of recyclable toothpaste tubes, we have around 470,000 kilograms of plastic that is connected with the toothpaste tubes has been converted into the recyclable stuff during this year. So these objectives directly supports the SDG goals as well. So on the energy front, we have been looking at the most efficient ways of managing energy that is available to us. Increasing our renewable footprint day by day. So far, we have 6% of our total energy consumption through renewables, which we aim to go to 9% by 2030. We have recently installed another big solar generation facility at our Lahore facility, which is already operational from the last year and is contributing towards the reduction of substantial quantities of carbon dioxide annually. So this reduction of energy, reduction of plastics, conversion of recyclable stream has impact on reducing the carbon footprints in our operation. So we aim to avoid GHG emissions by 20% by 2027 with a baseline of 2010. In addition to that, we have already embarked on tree plantation campaigns where we have planted 60,000 trees in the cities in the past 4 years. And of course, efficient logistics have resulted in the saving of around 300,000 liters of fuel, which further reduced the carbon footprint of our manufacturing operations. With this, I end this EHS brief, and I open the forum.
Abba, can you open the floor for question and answers, please?
Sir, can you see the screen of the chat?
No, I cannot see any screen right here.
Okay. One sec. Yes, the first question is, from 2020 to 2025, your revenue grew from 43 billion to 43 billion to 116 billion, reflecting an impressive 5-year growth, GAGR. However, YOY growth of 25 was only 2%. Could you please explain the reason for the slowdown in the year and share your expectation for year 26?
Yeah, actually, this has been a really tough year in terms of financial year 24-25 because after the, especially the imposition of the retailer tax on unregistered retailers, this entirely disrupted the market and to encash those vacuums created by the tax evaders. So many local players have come in, as Umar has actually mentioned, especially in the detergent categories. We have faced a very stiff competition from the branded players who, of course, carry an advantage over us in terms of non-compliant, belonging to the non-compliant sector. Their cost of doing business is very low as compared to us, and of course, they are in very regional pockets. So this has been a tough year in terms of detergents, and of course, the growth has also been slowed down. People have been down trading, and this is one of the reasons we've felt, despite all those challenges, there are of course some key achievement this year as well. We have growth profitably, we have improved our gross margins as well, and of course, we will continue the momentum for the next year.
Okay, the follow-up question is, for year 25, the company achieved a margin of 35.1% compared to 32.6% in the previous year. What factor drove the margin improvement, and what level of margin should we expect in year 26?
This year, actually, in the last couple of years, we have taken some significant prices. So of course, the trickle-down effect came in, and also one of the very key factors is that the company actually is very much dependent on imported raw materials, flavors, fragrances, right? So exchange rate remains very stable throughout the year. So that actually helped us a lot, along with the commodity prices, very favorable for our company.
Okay, how much of your raw material is imported?
It's roughly close to 75%.
Do you have any plan for stock split in near future?
We can think about that, of course, but right now there is no such plan.
Okay. And then the other one is, within the home care segment, how much of the revenue were contributed by the lemon mats and fabric care detergents?
Total is around 70 together. This is what we report.
Okay. You recently launched Max Scrub to compete with 3M Scott Brite. How much revenue expected for this product launch?
So it is growing. 3M obviously is not there in the market anymore. They exited the market last year, in fact, in 2020, end of 2023. So right now it is Max Scrub, plus there are some other local players which are there. 3M isn't, there in the market anymore. So we expect this category, the cleaning supplies overall, will be a significant part of our revenue going forward.
How much of product portfolio is internally produced and how much is outsourced to third parties? Is it beneficial to produce in-house or outsource the production?
I guess most of our production is actually domestic. We produce ourselves, but there are certain products which we outsource, very limited quantities.
Okay.
In the overall scheme of things.
Thanks. We have seen in hypermarket and large stores that new products have mushroom like detergent, dishwash, soap, etc. So what are your thoughts on it? Does it pose challenge to other products like toothpaste, etc.? And how do you intend to push your product and broaden and deepen your market share?
So, in modern retail or the large format retail stores, we usually have, a JVP. So we have a joint business plan with the large format stores, and yearly it is updated in terms of what sort of presence, we need in that retail stores. So every year we manage our shelf space. We try to grow it every year with our growing market shares. And this is how we, try to safeguard our interests in all these retail channels. Yes, the growing, threat of regional brands or the new brands is there, and it is more common in the smaller towns where we have different strategies to tackle these, new regional players.
Gross sale increased by 5% only, while inflation was around 7%. Was there a volumetric decline or did you reduce prices?
On couple of categories, we reduced prices. Yes, of course, it was in line with the competition, especially in the detergent sector. Volumes have more or less flat. There has been no growth in terms of volume.
Okay. What's your market share in fabric and surface care segment in Pakistan?
So this is something that we usually don't disclose, but in terms of range, I think in detergents we are around between, let's say, 30% to 38% market share, and in dishwashing we would be around between 50 to 60% somewhere.
Which category has high gross margin and which is lowest?
Oral care is our highest category margins, and of course, the lowest is detergents.
What is the company expectation on future margin? Are there any significant steps to be taken to further improve the margins?
Actually, there's a lot of exercise are ongoing, especially in terms of cost optimization and effective and more modernized manufacturing practices. And these are the things which we regularly undertake in terms of finding efficiencies, finding opportunities to save costs in logistics, warehousing. So this is an ongoing phenomenon. Of course, this is much required in terms to combat the inflationary pressures that any company can face in the Pakistani environment. And of course, in terms of maintaining or improving gross margins, these factors all contribute.
Okay, the next one is, what are your key raw materials that you import and where do you import them from? Can you share 3 to 4 key raw materials across your various business segments?
There are some key raw materials, of course, some chemicals, which of course derive from hydrocarbons that are used in detergents. These are imported from mostly Middle East. And of course, to make soaps, you need soap chips. One of the very key raw materials which has come from Malaysia, Indonesia, and other Asian Pacific countries. So these are some of the very key raw materials we import.
New product launch expected this or next year?
Yeah, so we have definitely pipeline of new products in year to go as well as in 2026. So keep tuned. There are going to be some exciting new products coming in.
And what is your opinion regarding consumer spending for year 26?
Consumer spending.
Consumer spending is definitely going to increase both in terms of media and on-ground investments. As the business grow, these investments are also going to grow.
Okay, how many retailers do Colgate have in its reach?
So according to the last survey that we had from Nielsen, our numeric was around 70 to 80% as a benchmark range.
Thank you. Any other questions from the participants? I guess we'll just give a couple of more minutes. If there's no more questions, we may close the session.
Yeah, sure.
Now, the next question is, Colgate does not source soap noodle locally.
So super.
Yeah, we purchase locally as well, yes.
Any plans of using debt financing to optimize capital structure?
Yeah, we already have very surplus cash. So right now we are not in any need to raise any debt.
How many of your sales is to big retailers like Imtiaz, Metro, and Al Fateh?
This is actually a very small part of our overall, revenue. This large set, retail is growing, but still it is, small contributor to our overall sales.
What is expected growth in top line and gross margin for year 26?
Of course, we aim and plan to grow at least in terms of top line in line with the inflation. And of course, in terms of gross margins, I guess it would be a real great work if we are able to sustain those gross margins, that improvement and that expansion that we have secured in this financial year.
Thank you, team. So, yeah. Thank you very much all for your participation. We may close the session now. Thank you.
Thank you all. Thank you.